Imagine waking up tomorrow knowing that money is flowing into your bank account, without you lifting a finger. Sounds like a dream, right? Today, I'll reveal the exact steps that successful investors use to generate passive income through real estate, so you can start building wealth, even if you're starting from scratch. Stay with me, because what you'll learn here could change your life forever. Real estate has always been one of the most powerful ways to generate long-term wealth. Unlike other investments that require constant monitoring or trading, property can generate a steady flow of passive income if approached correctly. Many people think passive income means doing nothing, but the truth is it requires a strategic plan. By choosing the right properties and financing methods, you can create income streams that keep paying month after month, year after year, without actively working for them. The first step is to understand the types of real estate investments that offer passive income. Rental properties, commercial buildings, real estate investment trusts, REITs, and short-term vacation rentals are all viable options. Each comes with its own risk and reward profile. For example, residential rental properties in high-demand areas provide steady cash flow, whereas commercial real estate can offer higher returns but may require more complex management strategies. Finally, recognize that passive income is not instant wealth. It's about building a financial ecosystem that works for you over time. The key is to start small, learn the market, and scale gradually. Those who ignore research or rely on luck often fail, while those who approach with discipline and knowledge build long-lasting financial freedom. Choosing the right location. When it comes to real estate, location is everything. The success of your investment depends more on where your property is than the property itself. High-demand areas with job growth, good schools, and robust infrastructure attract tenants consistently. Imagine investing in a city where employment rates are climbing, new businesses are opening, and people are moving in every month. Your rental property will almost never sit empty. Look beyond the obvious. Some emerging markets might offer incredible opportunities that are still under the radar. For instance, small towns with new business developments or suburban areas near metropolitan cities can generate higher returns with lower initial investment. Don't ignore the long-term potential. Sometimes the place everyone is ignoring today becomes the hottest market in 5 years. Also, analyze local laws, taxes, and property management regulations. These factors significantly impact your net income. Ignoring them can turn what seems like a profitable investment into a financial burden. Understanding location is about more than just scenery, it's about predicting where people want to live tomorrow, not just today. Financing your investment. Many beginners believe you need millions to invest in real estate, but the truth is creative financing opens doors for almost anyone. Mortgages, partnerships, private lenders, and even crowdfunding platforms can help you start without draining your savings. Leveraging other people's money wisely allows you to acquire assets that generate returns far higher than the cost of borrowing. The key is understanding your cash flow. Calculate expected rental income, property taxes, insurance, and maintenance before committing. A positive cash flow property ensures your investment is not just a financial liability but a revenue-generating machine. Avoid properties that look cheap up front but bleed money every month. And remember, leverage is a double-edged sword. Too much debt can ruin your finances, but smart, calculated borrowing multiplies your returns exponentially. With the right strategy, your money begins to work for you while you sleep, creating a self-sustaining income stream that grows over time. Rental properties, the steady cash flow. Rental properties are one of the most reliable sources of passive income. Once you purchase and rent out a property, monthly rental payments provide predictable cash flow, often covering the mortgage and generating extra profit. Long-term rentals are especially valuable because they create stability while property values appreciate over time. However, success in rental properties requires careful tenant selection, effective property management, and maintenance planning. High-quality tenants reduce risk, while poor management can quickly turn a profitable investment into a nightmare. Some investors hire property managers to handle day-to-day operations, transforming a hands-on business into a true passive income model. Moreover, the beauty of rental properties is compounding. As you pay down your mortgage and property value increases, your equity grows silently in the background. Over time, what starts as a small rental can evolve into a portfolio of properties generating life-changing income. REITs, investing without owning property. If managing tenants and maintenance seems overwhelming, real estate investment trusts, REITs, offer an excellent alternative. REITs allow you to invest in commercial and residential properties without actually owning them. They pay dividends regularly, making them a hands-off way to enjoy real estate returns. REITs are traded like stocks, which means you can buy and sell them easily while still benefiting from property appreciation. They are perfect for beginners or anyone who wants passive income without becoming a landlord. Some REITs focus on luxury apartments, offices, or even logistics centers, each offering different risk and reward opportunities. The real advantage of REITs is diversification. By spreading your investment across multiple properties, you reduce risk while still tapping into the booming real estate market. In essence, you earn consistent income and potential growth, all while someone else manages the properties for you. Short-term rentals, high returns, high strategy. Platforms like Airbnb and VRBO have transformed real estate investment. Short-term rentals can generate higher returns than traditional rentals, but they require more active management or smart outsourcing. Location is crucial. Tourist hotspots, business hubs, or cities with high event traffic produce the best results. Success in short-term rentals comes from experience and attention to detail. High-quality photos, excellent service, and competitive pricing attract more guests, increasing occupancy rates. Many investors hire management companies to handle bookings and cleaning, effectively turning a high-maintenance model into a semi-passive income stream. Moreover, short-term rentals can adapt to market trends faster than long-term leases. Prices fluctuate based on demand, giving you flexibility to maximize income during peak seasons. Done right, these properties can skyrocket your passive income faster than almost any other real estate strategy. Property appreciation, wealth building beyond rent. While rent provides regular cash flow, property appreciation builds long-term wealth. Over the years, real estate generally increases in value, allowing you to sell at a profit or leverage equity to buy more assets. This dual benefit, income now and value growth later, is what makes real estate so powerful. Even in slow markets, strategic renovations or improvements can increase property value. Upgrading kitchens, bathrooms, or adding amenities not only raises rent but also accelerates appreciation. Investors who understand both cash flow and capital growth outperform those who focus on just one. The magic lies in compounding. Over decades, your initial investment can transform into a vast portfolio generating income streams that cover expenses, pay off debts, and provide true financial freedom. Real estate is a game of patience, strategy, and vision. Tax benefits and legal advantages. Real estate investing is not just about income, it also offers incredible tax advantages. Depreciation, mortgage interest deductions, and tax breaks for property improvements reduce your taxable income, increasing net profit. Many successful investors legally pay less tax than the average worker by leveraging these benefits. Understanding local laws and hiring professional accountants ensures you stay compliant while maximizing returns. Tax strategies can include setting up LLCs, structuring partnerships, or reinvesting profits into additional properties. Each method builds wealth efficiently and legally. By knowing the rules, you turn the government into an ally instead of a barrier. These advantages allow your money to grow faster, making your passive income more robust and sustainable. Knowledge is power, and in real estate, it's also profit. Building a scalable portfolio. Once your first property succeeds, the goal is to scale intelligently. Buying more properties increases income and diversifies risk. Each property adds a new revenue stream, turning a single investment into a self-sustaining ecosystem. Scaling requires discipline. Don't chase flashy opportunities without due diligence. Use leverage smartly, reinvest profits, and expand only when cash flow remains positive. Over time, you can build a portfolio that generates enough passive income to replace your day job entirely. The real secret is compounding not just your money, but your knowledge. With every property, you learn more about markets, tenants, and strategy. Eventually, you become a master investor, generating wealth that works for you, even while you sleep. Mindset, the true key to passive income. The most overlooked factor in real estate success is mindset. Passive income requires patience, persistence, and a willingness to learn from mistakes. Fear and hesitation are the enemies of wealth creation, while action and discipline create lasting freedom. Successful investors think long-term. They embrace challenges, celebrate small wins, and continuously seek opportunities. Real estate isn't a shortcut, it's a journey that rewards strategic thinking, resilience, and informed decisions. Remember, your first property is just the beginning. By taking calculated risks and staying consistent, you can build a lifetime of financial security. This isn't just about money, it's about freedom, choices, and the ability to live life on your terms. Now you know how real estate can transform your life, creating passive income that grows even while you sleep. But the journey doesn't stop here. Take action, start small, and scale smartly. If this video inspired you and you want more step-by-step strategies to achieve financial freedom, hit the subscribe button, turn on notifications, and join our community of investors who are building their dream life, one property at a time. The first step is always the hardest, but your future self will thank you. Don't wait, start today.